In this lesson, we're going to review what actually goes into your trading journal. It is something that gets quite a bit of mention, quite a bit of lip service, for lack of a better way of putting it, but we are going to show you what it's supposed to look like as opposed to the glorified document that you put in how you made money or lost money for the day. I think you'll be a little surprised what is actually in the journal. So we're going to start out. There's going to be three pieces here. There's going to be the pre-market journal. There is going to be the during market hours journal, which is incredibly important, and I'll explain why in the next slide. And then the after hours journal, which is more of a recap of what you did and thought during the day, so that you can ultimately get to the point where you're learning from your experience. I'm stressing it over and over again because most people don't. I'm just going to put it out there and say exactly what it is. Most people don't learn from their experience, and I want to do the best job I can possibly do to put you in a position to say, I did this today, and here's what I learned. Again, if you go back to that book that I had mentioned, I highly recommend it. The book is called Mindset by Carol Dweck. You can find it on Amazon pretty quickly or any local bookstore. So I want to point out this is a hypothetical. This is not from actual trading. Wednesday, June 15th, that is a real day. But this is not anything I mention in here. This is guidelines and a template and ideas for what you would actually put into a journal. So starting out, I want to make it clear we're talking about an hour before the market opens. Now, I want to say that I mentioned it in, I believe it was video one, if I'm not mistaken, or in the intro videos, that I generally do my game planning on the 7 p.m. at night, and then I finish it up or review everything 7 o'clock in the morning. If I don't happen to do it at 7 p.m. at night, maybe something was busy or something was going on, then I'll start a little bit earlier than 7 o'clock in the morning. But the point that I want to make here is you never want to go past this time. Or I shouldn't say never, but you should strive your best to always have a completed game plan done at least an hour before the market opens. At the very minimum, a half an hour before the market opens. You never want to be reacting. You always want to be in charge, and that's why I specifically put in 8:30 here. Now here is another key part. Before we even look at what's going on, my game plan for the day is to be bullish. I want you to. I will train you to have the conviction to say, today I want to be a buyer because that's what order flow is telling me. Today I want to be a seller because that's what order flow is telling me. Literally have the guts to say, I know what I'm looking at. I am expecting the market to go higher today. Now, again, as I've said probably 5 times already, the game plan is an expectation based on probability, what you're looking to see happen today. You could go into the day saying, I plan on being bullish, and the market could go in the other direction. That is perfectly normal, and it's okay. It's not the fact that it went the other way. What matters is you had a structure, you had an expectation, and if it did follow through, you were prepared to make money. That's what matters, okay? So I'm going to keep giving you my experience that I wish I would have known that when I first started trading. All right, so game plan. Coming into the day, again, hypothetical example, but this is a normal case study. Let's say we have 4 stocks to buy and 2 stocks to sell short. Now, the immediate thing that should be going through your head, well, we just said that we think the market is going to be going higher today. We think that the market is bullish. We're going into the day expecting to buy. Well, on the surface, you should be saying, well, these are the main stocks we're going to be concentrating on. If I want to be bullish and I'm expecting the market to go up, I'm going to be focusing here on the 4 stocks that I'm looking to buy. In case the market trades below the open, in case we end up getting short-term intraday order flow, it could be profit taking, it could be selling, and we'll get into the difference between the two. You always want to be prepared. You want to look at stocks on the long side of the market and the short side of the market so that you're prepared to make money in either case. Now, obviously, if the market starts to go higher, you're all over these stocks. Now, a question that I get regularly is, how many stocks should I have in my game plan each day? That really comes down to 2 really crucial things. Number one is, how much capital are you trading with? How much buying power, how much leverage is available to you? That will dictate how big of a roadmap you should be looking at during the day. If you have a very small account, and again, small is relative to each person, you should not be game planning a massive game planning list because, quite honestly, you will lose your focus and miss the opportunities that match your resources. Remember how you see how we keep bringing the conversation back to your goals must match your resources, and then you choose the right strategy that matches your goals and resources. If you have a limited experience, if you have limited buying power, your list should not be that big. Now, what does not big mean? If you don't have a lot of experience, you can get or a big account, you can look at, now here's the key, I want to get this across. For your game plan, you could look at, let's just throw a number out there and say 20 stocks. You could look at 20 stocks, and then from those 20 stocks, which will, in this argument or case that I'm building here, your list of 20 stocks will be called your house list, or your everyday list, your daily universe, whatever terminology you're comfortable using. You look at those stocks no matter what. They have liquidity, they have plenty of volatility, you get comfortable trading them no matter what. And then we'll also look at some stocks that just meet general scans for bullish or bearish. So you can generally have a list of, let's say, 10 to 15 stocks that you look at, and then from that list of 10 to 15 stocks, you'll end up game planning however many meet the criteria, and ballpark, it will usually be around a third of those stocks. All right. Next, based on yesterday's strong close, again, this is what I'm writing in the journal pre-market. Okay, so this is all pre-market journaling. Based on yesterday's strong close, I'm expecting a higher open. So we're actually taking it two steps here, right? We're expecting it to be bullish, but now we're also saying based on a strong close yesterday, we're expecting a higher opening. So if the stock, let's just say it closed here, we're expecting it to open here. If the gap is not large, now we're adding an extra piece to the game plan, right, in the pre-market journal, I will buy the breakout of the opening range. So we're already saying bullish, we're already saying expecting a higher opening, and then we're putting a caveat on there for a different scenario. If the open is a large gap higher, so let's say if we closed here and open up here, remember we talked about when we looked at the specialist and the market maker, an imbalance on the open, which would be a higher opening. I'll wait for the first push lower in my bullish stocks to buy. So that's a mouthful right there, right? We're expecting a bullish day. We have these four stocks. We're saying we're expecting a higher open. If it's not a large gap higher, we're going to buy. Remember we talked about the opening 15 minutes, the opening 15 to 30 minutes. That's what the opening range means. If it is a large gap higher, I will wait for the first push lower in my bullish stocks to buy, which are these four. So think about one little sentence or three short sentences in there. That's a mouthful. Think about what you're doing right now. You are saying, I have an expectation for the day. Regardless of what happens, I know exactly what I'm doing. And we're taking it a step further. If we get a higher opening, I know what I'm going to do. If we get a flat opening, I know what I'm going to do. Think about you going into the trading day saying, there is no pressure on me on the most volatile time of the day because I know exactly what I'm planning to do. How powerful is that for you to wake up and say, I know what the hell I'm doing no matter what? That's why most traders stay away from the open, because they don't do that level of planning. You're getting my 16 years of experience here. That's powerful stuff. To go into the open and say, it doesn't matter what happened because I know exactly what I'm going to do, and to be able to confidently pull the trigger and trade that volatile, liquid part of the day, which is where most of the money during the day is earned, you're putting yourself in a position to win in the long term because you're ready to make money. That's what we're going to do together. Next, little more detail to the pre-market journal. Technology stocks are showing solid buying order flow. Airlines are showing selling order flow. So what are we doing there? We're preparing ourselves to get to the point where we're saying if the market does something and starts to trade in a particular direction, well, what if these four stocks don't do anything that I expected. What if these two stocks are out of play because the market's strong? Well, I'm saying the first area I would look for if I was looking for new opportunities. Now, I said before, if you're new, I would stick to your pre-market game plan. And if the market gets weak and does not give us buying order flow during the day or bullish expectation, we're saying the airline stocks coming into the day have selling order flow. So I'll keep an eye on these two industries for opportunity in addition to my game plan stocks. Now remember what I said in the previous video. How far outside of your pre-market game plan you venture is going to be based on your experience level. How much can you handle outside of this game plan? You will find that more often than not, this game plan is plenty. If the market does something different, or if your game plan is slow, meaning you're not breaking out of that opening window, or maybe the gap higher is too big to justify the trade, that kind of stuff, you're preparing yourself. So your journal is a little bit different from your game plan, because we're not saying which stocks are here, right? We're just saying 4 stocks to buy. We're not saying it's Microsoft, Tesla, Apple, Netflix, that kind of. We're not saying what the 6 stocks are and how we plan to. This is more of a general pre-market analysis. Now, why is this a part of your trading journal and why is it important? Here's why. Remember how much we've been saying you need to learn from your own experience? This is where the mental bank account really starts to add up in your head. At the end of the day, the market closes for whatever, an hour after the market rings, you go home, you go to the gym, you work out, you go for a walk, you have a glass of wine, you relax, right? Now you read what you wrote at 8:30 in the morning. You're going to read what you wrote here. And you're going to say, okay, let's see how the market unfolded. This is going to be increasing your skill level, which will increase your confidence when you look at the mirror and you say, I know what I'm doing. This is awesome. This happened, that didn't happen, but I was prepared. This happened, this happened, this happened, I was ready. That's why the pre-market part of the journal is important, so you can go back and say, my read on the market today was pretty good. So what's going to happen the next time that the market opens and it's doing exactly what you planned? You're going to say, you know what? I know my stuff. I'm going to put a trade on. I have absolute, aggressive, confident decision-making ability because I know what the heck I'm looking at. And we haven't even gotten into what you're looking at yet. We're just giving you a rundown of what it means to understand, which builds that conviction. The last part here in the journal, you're just going to make a quick jot down any economic numbers, any earnings announcements, blah, 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 so that you need to know any announcements in my stocks, any conference calls in the stocks I'm trading. You always have to go to that last part and say, okay, I'm trading these stocks, I'm looking at these stocks, but are there any other announcements during the day that I need to know that I might not want to trade, or at the very least that I need to be aware of? Let's say, for example, maybe you're trading Chevron and ExxonMobil, or maybe Valero, VLO, or Tesoro, TSO, or PSX, or whatever oil and gas stocks are out there. You need to know when the oil inventory numbers are coming out, which is usually 10:30, about an hour after the market opens. You want to know if it's coming out. Do I want to be in a position? You'd write that down. Maybe you want to be flat. Maybe you want to lighten up. Maybe you might not want to trade it at all. That kind of stuff. So all that is a part of your trading plan, which goes into your trading game plan, which you'll document all these ideas in your trading journal.